Hey guys, this is Losada with Simple Option Strategies. Today I am going to cover the wheel strategy, and I've been trading this since December. Okay, in seriousness, I mean with the trade plan and everything else, and it's done really well. And I just wanted to, after a few months of trading this now, I just wanted to share what my criteria is and the stocks that I'm using, et cetera, so that hopefully you can gain some value out of this. So let's let's move on here. Okay, so first of all, let's talk about what it is, right? What is the wheel strategy? And the wheel strategy basically is it's selling cash secured puts for the purpose of collecting premium over and over again. Okay, so cash secured puts are basically puts that you have the ability to buy, right, if the stock is put to you. So the most important thing is that you need to be able to purchase the stock in case it's assigned. Okay, so the goal is not to get assigned, and we'll go through that. But this is really important to make sure that you have enough in your account to do that. If your account is a cash account, your brokerage is gonna force you to have the right amount of funds to do this. If it's not a margin account, a cash account, then basically the formula is like 20% of the stock value plus or minus certain things, but it's a lot less that you need into your account. But still, if you're still working with a margin account, make sure that you're able to purchase a stock, and it's a minimum of 100 shares. Okay, so let's move on here. You can ask questions as well, and I'll answer them as best I can. But in any case, and I'll be looking for that. Okay. Secondly, the goal of the strategy is to collect premium and not to be assigned a stock. All right, that's very important because it's really a income strategy. But in case you do get assigned, there's a process for that, right? And it's selling calls against it. Okay. The cash secured puts should be sold over and over again or rolled for a credit to avoid assignment. That's really part of the trade plan here. Okay. I've been able to do it completely, and it's worked for me. Okay. Over the past 3 or 4 months, and we've had some mini corrections, right? We had a drop of 5 or 6% during that period of time, and everything worked out. Okay, so it's a safe strategy if you're willing to purchase the stock. All right. The stock selection is really the most important part of the wheel strategy because you could end up owning the stock, and you want to own high quality stocks, okay, that are trending in the right direction, which is up, and you want to be able to own that stock and be happy that you owned it. Okay, that's really part of the criteria. Lastly, here, the price of the stocks should be in line with the size of your portfolio. Okay. Again, I'm going to reiterate this point. Assignments are in 100 share increments, so be sure that you can absorb the purchase of the stock. Okay, so if you're dealing with, let's say, MU, right, which is like an $80 stock, that assignment would cost you $8,000 to absorb that. Okay, so if you can't, look for lower price stocks, and that way you'll stay out of trouble. All right, I don't see any questions, so let's move on. So let's talk about the stock and option criteria. All right. First of all, you want to have a stock that's growing earnings for at least a year over that period. All right. So earnings are growing quarter after quarter for a stock. Okay. That's so it's kind of you're looking for a high quality stock. All right. The implied volatility should be between 40% and 140%. So below 40%, what happens is you don't get enough premium to make it worthwhile to trade this. Okay, and over 140, it's really kind of crazy. You don't want to go over that amount because then the stock can be too volatile and can drop, and you don't want to be exercised. Okay. The stock price, you want it to be trending higher on a daily chart. People use the 50-day moving average. You know, as long as it's above that and moving from the bottom of the left-hand side of the chart to the top right-hand side of the chart, you're good. Okay. You sell the put when the stock is down from 2 to 5%. Okay. So again, this is a trending stock, right? A stock that's trending up, but you want to buy it, or you want to sell the put when it dips, right? And that's really the purpose of that. Again, you want to have the ability to buy 100 shares of stock. The option delta for that stock, and when you look for a premium, you want that delta to be between 10 to 20. Okay, and that's basically what I use regularly. The expiration should be between 7 to 14 days out. I typically you can do monthly, you know, non-weekly expirations, but I typically look for stocks that have weekly expirations, and they go really, really quickly. And just so you know, the greatest amount of decay in the stock premium happens between typically between 5 to 7 days, and so that's why I look for these particular expirations. Okay, less than 7 days, a little too close, and it gets you too close to the money. So I like to go a little bit further out. Your volume, and that's based on the previous day's volume, is minimum is 250. And the open interest should be over 500. Okay, so that's really the main criteria. Now I use bar charts. Okay, and this is actually the criteria that I use to find these stocks. Okay, and in the end here, I'm going to share with you the actual stocks that I'm trading today, or not today, but the stocks that I use to trade for the wheel trade. Okay, so you can see here that the last price is between 5 and 100. Expiration, you know, you don't want to be in a stock that you have earnings coming up. Okay, so that eliminates that. So I always look out to make sure that earnings is not really close or within the expiration period. Okay, the expiration period, days to expiration is below 60, and I use weekly expirations. Let's see, security is stock. I don't use ETFs, and I know people who do use ETFs on this, and that may be an area that I may delve into a little bit later. Option volume, again, minimum 250, open interest, minimum 500, and then moneyness basically is how far out of the money is what percentage out of the money is your strike price compared to the price of the stock. And that's really the main criteria that I use. And today I just pulled it up. All right, and this is the selections that I have today. You can see here where it starts. You know, the moneyness. You know, how far out of the money this particular position is. Expiration date. Volume, open interest. So it gives you all that criteria. It's a great scanning tool. And it's not very expensive. I bought the annual. I think it's like $200 for the annual. Okay. No questions. I'm going to keep going here. All right. So examples of stocks that I use are AMD, apps, DHI, all these stocks here. I've done naked puts on these over and over and over again on all of these, basically, during the past 3 months. Maybe except for DKNG, I haven't done, as I remember. I just looked at it today and it looked pretty good. So plug, I can tell you that right now I am in trouble with, and I've had to roll that one like 2 or 3 times. But every time I've rolled it, I've been able to collect a credit on it. And so, you know, as long as I can do that, I'm not going to let it get assigned, but probably eventually I'll have to get assigned on this one. Okay. So these are the current ones that I'm using today, and hopefully you can get this and try it out yourself. So I wanted to share with you too, just kind of like a perfect setup. So this is MARA, and you can see here that we have a nice trend moving higher here. Okay, and this area down here around 35 is a nice support area. Okay, that we had a breakout of, and then it dropped down to 35. So I look for that, and and I like to have the strike price below those support areas, so that if I do get in trouble, then it has to break that support and go further down. Okay. So in this case, looking at the 1 April expiration, strike price of 33. So you can see that the 33 is pretty well below the 35 area, and I would have collected a premium of 85 on this one. So this is kind of a ideal position to take on, and I have traded Mara very a lot of times on with the wheel trade. Okay, so any questions about any of this? Okay, try to keep it simple. This is what I've been doing. You can actually look at my performance. I have a Google sheet that's pretty widely shared, and basically since trading one contract, sometimes two. Since December, I'm up over 2K on this, and I just basically go for base hits. Okay, I take $50 to $80. I close the trade 50% or less of credit, and or 50% or more of credit, and close it out as quick as I can. My average holding on these positions is about 5.3 days on these positions. Okay, so it's a great strategy. It's fast. You get paid quickly, and I really recommend it to dive in and try this strategy. It's a great strategy. All right. That's all I have for today. Hope this was of value to you, and happy trading, guys.